Hello, I'm Max Keiser. This is the Keiser Report. Hey, we're going to do a little bit of magic right here. Stacy.
Well, to do magic, you need either cards or coins, right? Well, I've got this little tiny coin here. But you know how like the biggest forces in the universe are quite tiny, like a collapsed star being like a really dense mass, which sucks in all sorts of, it has very high gravity. Well, this coin is going to save the day because, you know, right now in America, everybody's talking yet again. The last time they talked about this was 2008, 2009, the $1 trillion platinum coin.
No, again?
Of course, $1 trillion, 12, 13 years later is not nearly as much as it was back in 2008. Back in 2008, the richest man in the world was like Warren Buffett, and he was worth like $40 billion. Now it's Jeff Bezos and Elon Musk and Bernard Arnault, and they're worth like $200 billion. So it would have to be at least $4 trillion. But, you know, the headline here reads, to prevent a potentially catastrophic debt default, an increasingly vocal chorus is saying that the Treasury should issue a small platinum coin, give it a value of $1 trillion, and deposit it at the Fed. So, Max, my $1 trillion coin is special. So they go for a mere trillion. I'm going to call it a sextillion coin, right? We're going to go full sextillion because trillion is very Dr. Evil. As we said, it's not that much anymore because you see $1 trillion only has 12 zeros. A sextillion coin has 21 zeros on it. That could rescue the entire global financial system.
Wow, we're going the other way. Venezuela, they're lopping zeros off their currency. In America, they seem to be dedicated to adding zeros on. But I have a question for you. Would like to get your thoughts on this.
True.
This idea that minting a trillion coin is somehow going to mitigate the problems of the debt that America has and the debt default. Why can't we just be honest about this and say that America has defaulted on its sovereign obligation? Because $1 trillion, as you point out, with the roughly $30 trillion in exposure, and if you add the unfunded liabilities of Medicare, Medicaid, Social Security, it's closer to $300 trillion. You know, and they could just as easily say they're minting a $300 trillion coin as they say that they're minting a $1 trillion coin. They still believe, Stacy, as I understand it, that this is a stopgap measure because at any moment now, and they've been saying this now for 30 years, but at any moment now, the GDP is going to start up skyrocketing enough so that incomes will go up so that the tax revenues collected, which is approximately just under $3 trillion last year, to start paying down the debt. I think that's what they think, that they're just doing a stopgap measure. They still believe that at some point, taxpayers are going to pay down that $300 trillion.
Well, Max, you used to be a magician. So you remember a magic show will be like,
I think that's a mime show, but nevertheless, I get your point.
No, there's a lot of like, you know, fingers and gestures and point there and distraction and diversion and things like that. Misdirection. So you have a lot of that, and people are like wandering around and they don't see what actually happens right in front of them.
You're saying there's a malevolent intent.
Well, are you saying magicians are malevolent? I'm saying
magicians are purposefully obfuscating the truth about what it is they are presenting to the audience in a way to cause the audience to misdirect and not see how the magic is done. So you're suggesting that this $1 trillion coin is just a huge David Copperfield-like misdirection so that people don't focus on the magic of money printing to create the billionaires and the deca-billionaires. Is that what you're saying?
Yes, in a kind of Leo Strauss way. Back in the, from the Chicago school, 1950s, his thing was that basically the deplorables and the masses are really too stupid to be told this stuff. And it's better just to be kind to them by misdirecting and entertaining them with various like television programs, movies, religion, things like that.
So when I was watching the Bozo the Clown Show as a kid, or Captain Kangaroo,
True.
which had an excellent character, by the way, Bunny Rabbit, who made it rain ping pong balls. One of the greatest moments of television ever. And we had Winky Dink. You put a piece of plastic on the TV screen and you stare 2 inches away from the screen and you draw Winky Dink a little bridge to save Winky Dink. You're saying that the policymakers in the Federal Reserve Bank and Joe Biden, the president, thinks America is so freaking stupid that they can make them believe that picking up a worthless, shiny, round object and going hocus pocus over it magically turns it into $1 trillion that they can deposit at the Federal Reserve or the Treasury to somehow mitigate that $300 trillion debt crisis? Is that what you're saying?
That's why we have you here on the Keiser Report, in order to explain this sort of stuff. Yes, that is pretty much monetary policy.
Quick, draw $1 trillion platinum coin for Winky Dink so that he can save America.
Do it on the screen right now. Way! You rescued the economy.
That's really cynical on the part of the policymakers out there who don't seem to care about the collateral damage of their fraud and their really bad magic and Winky Dink show. Gosh, golly, I'm upset.
Right. Well, I think like all empires and stuff like ultimately end in a whole grab bag of magic tricks. Back to the Roman Empire, clipping their coins. That was like a magic trick, right? And at the end of the day, we all get to this point. In terms of the cynicism that you mentioned, this headline here was interesting because it ties in with an audience. When you're a magician, you lose your audience when they're all cynical, right? They know what you're doing. You want them to be like amazed and wow and oh, this is great. Well, when they start going, whatever. Most Americans today believe the stock market is rigged, and they're right. New research shows insider trading is everywhere. So far, no one seems to care. No one seems to care, they say, except for, of course, on Keiser Report, where we see beyond the magic tricks.
Yeah, it's a remarkable statement for a couple of reasons. Number one, the job of journalism is to highlight these things in a way that would get people to care, right? I mean, they're saying that the markets are completely fraudulent, and instead of digging into more specifically how and the damage this causes, they're shrugging their shoulders and saying, what's fraud these days in America? There's nothing as I've said many times, the business model of America is fraud. And if you took fraud out of America's business life, you would have nothing left except a bunch of, Native American reservations in North Dakota somewhere laughing hysterically, and they predicted the whole thing.
Well, the thing is this is a cantillionaire economy. And though the cable news will say that most people are deplorable and dumb, the fact is they see what's right in front of them. They see the emperor has no clothes. They see the Cantillon effect. They understand the magic trick now. They're totally bored. And, you see that in many, many openly corrupt dictator economies.
Right. So the second point is that it's not that they don't care. It's that the vast majority of Americans are desperately trying to mimic and ape the fraud that they see being committed by Goldman Sachs, Jamie Dimon, all the Wall Street bankers, the Federal Reserve Bank, 2 of them caught for insider trading just in the last few weeks, right?
More than that, there's another one.
Okay, so the bankers, the central bankers are being caught trading on inside information. Nancy Pelosi caught trading on inside information, right? So the Americans, it's not that they don't care. They're like, how do we cash in on this inside information? And so they're desperate because inflation now is creeping in and they can't afford the food, the shelter, the clothing and the energy anymore. Their only way to survive is to commit fraud. And that's when an empire truly collapses, is when the majority of the population, like we have in America today, in order to survive, they have to commit fraud. It's like Victor Hugo's masterpiece, Les Miserables. The street urchins, to survive, had to steal. And that's the great dramatic course of this great novel. And in America, the majority of Americans, in order to survive, they must steal. And the media saying, it's okay to steal. We'll absolve you from stealing and be the worst moral, unethical piece of garbage you possibly can, America, because that's the only way you're going to survive.
Well, let's look at what's happening over the past year, year and a half, 2 years across America. You see it in San Francisco, New York. Gangs of young guys mostly, just going in and robbing everything. And what they're told, the shop owners are told not to stop them, to just let them do it. So it is Les Miserables. This is the end game. So nevertheless, the problem is it's fun at the beginning, because all inflations are fun at the beginning because you feel rich, you're getting rich, especially like, domestically America versus the rest of the world, because we can print more money. So we can be like, haha, send us all your goods, we're rich. But then the cantillionaire class, who owned more assets in the beginning, start to just like fly away with everything. So first-time home buyers and housing advocates want more action to tame prices of house prices. But economists and policymakers worry aggressive moves could hurt existing homeowners and upset the global recovery. So existing homeowners, the Ponzi scheme nature of this, the first in on a pyramid scheme are the ones with the most gains, the Cantillon effect. And now this is the conflict that they're highlighting in this Wall Street Journal piece about house prices are up a huge percent in the past year. Incomes are only up 3%. Houses are up to 36%.
Right. And as we've been saying, since the central banks over the past 30 years, and getting worse with each successive Fed chair, has failed to do their duty by raising rates in the face of too much money printing or inflation, they have created this situation right now. And since they never raised rates, what they did was they transferred trillions of dollars to a few oligarchs in America, and they took the entire country and they threw it under the bus.
That sounds like a magic trick. I was just looking for my sextillion coin and I can't even find it.
Yeah, I pocketed that. I've cashed it already on eBay and bought myself some brand new.
This feels
what do you call those sticks that Bruce Lee used to use?
Nunchucks.
Nunchucks. Thank you. We're going to take a break, and when we come back, much more coming your way.
I found my coin. I'm wealthy. I'm the richest person in the world.
Welcome back to the Keiser Report. I'm Max Keiser. Time now to return to our conversation with Lawrence Lepard. Lawrence, welcome back.
Thank you, Max. Nice to be here.
Alrighty, so you're the man to talk to in the gold bug community that understands a little bit, or I should say a great deal, about Bitcoin. So you're the go-to guy, and you're going to be appearing at the Gold Show in New Orleans coming up real soon, talking about sound money and gold and Bitcoin. Now, recently Morgan Stanley pointed out that Bitcoin has replaced gold. Your thoughts?
Well, Bitcoin is a really sound form of money, and it's a digital form of gold, in my opinion. I call Bitcoin digital gold. It's limited in supply. It's actually deflationary. The supply of gold will double in the next 40 years. It grows at about 1.7% a year. And so Bitcoin, obviously, we all know the supply is fixed or approaching a fixed number. I don't think it's entirely replaced gold. Couple of reasons. One, it just hasn't been that widely spread. There are a lot of people around the world who don't even know what Bitcoin is. And I think gold will have residual value for quite some time. I could maybe make an argument, as I know you do, that Bitcoin will slowly but surely replace gold. And I think over many, many years, that probably will occur. But to say it's happened immediately, no. Two advantages gold does have over Bitcoin. There are many advantages, but two that are very clear to me that it has over Bitcoin is that it's bearer money that's not on a blockchain. So if I have gold coins, nobody knows I have them. Nobody can get at them. There's no trace of how I got them. And that's a nice thing. The second thing is that the gold I have, the energy is spent up front in mining it. A lot of energy spent to get the gold out of the ground. And really money in throughout most society has just been stored energy. And in Bitcoin, the case the energy continues on, I don't think that's a problem. And we've all discussed that issue and how modest the energy is versus the value that Bitcoin provides. But the point is that gold, once mined, there's no additional energy cost.
Right, but there is a cost with gold. And you've got assaying the gold to make sure it's real by a third party that you have to trust, which is a huge problem. You've got storage. That's costly. You've got other costs involved in gold, which I would posit exceeds the de minimis costs of Bitcoin on the network. But anyway, let's continue on here. So you wrote, and this is a very interesting point. I know you're a deep thinker, and you came up with an interesting little thing here. If your cost of capital is zero, the market value of every enterprise with a profit becomes infinite by definition. Okay, tell us about this.
Well, the point here is that zero cost, zero interest rate policy is really a crime against economics and capitalism. The notion, money is supposed to have value, right? And time has value. And so the notion is when you have money, you would get paid interest for loaning it out over time. But if the interest rate is zero, then by definition, it's a tautology. By definition, the money has no value. And in turn, it implies that, everything that earns money, every business that's profitable in a capital asset pricing model, which we were all taught in business school, has an infinite value, which, obviously they don't. But what I'm describing, Max, is really what you're very aware of, which is the cotillionaire effect. When you give free capital to people and allow them to buy yielding assets, guess what? They end up rich. And the rest of us who don't have access to that free money at the spigot, we don't end up rich. And this is why, the people who are in the finance business, in the financial centers of the world have become billionaires. And in turn, the average man pays a higher price for average man and woman pays a higher price for everything they buy year after year.
Right. Well, we live in an economy that's driven by Keynesianism thinking, which is basically the idea that we don't really encourage you to save or to become individually sovereign, but we try to make credit easy for you to access. You have easy credit, and that's all you need. You don't need savings.
Yeah. Right.
And this is what, when I hear Washington discuss, or Paul Krugman over at the New York Times, this is his mantra. This is how he was trained. The policies being discussed in Washington now are always about raising the debt ceiling or increasing the debt, or there's this notion that I think it was Ronald Reagan, in fact, who said that debt doesn't matter. Debt doesn't matter. Essentially, is what the bottom line is. That doesn't seem sustainable. It seems like saying that gravity doesn't matter, Lawrence.
Right, I totally agree, and it's a complete lie. Keynesianism is just downright wrong. The fact that it always has been. It's a method of the state to get more control over our lives. The fact of the matter is what makes things better in the world are savings, and then the savings are invested in productive things, and those productive things increase productivity, so we get more for less, and as a result of getting more for less, we get a higher standard of living. And that's what happened between 1789 when this country was founded and 1913 when the Fed was created. And since then, although we've had all these amazing technological developments, we've been carrying around this albatross of Keynesianism, particularly since 71. And, it's made our lives much, 10 times harder than they need to be. And the fact of the matter is that Keynes was wrong. Apart from the fact that individually he wasn't a very good guy, that's a different issue. But Keynes and his theory are wrong. And unfortunately, the entire economics profession, all the universities, everybody's in bed with Keynesianism because that's how they get paid. And those of us who are out there trying to build things that are more productive, Austrian economists who understand the business cycle, understand that investment is the key to increased productivity, we get dumped on by the Keynesians. And the fact of the matter is, it's going to be very sweet for you and me, Max, because they are going to fail. They're going to fail spectacularly. And, we're going to end up with all the marbles. And that's going to be really fun.
No, I'm having fun already. But, one of the things we've observed here in the last 20 or 30 years is this model, this Keynesian model, which is the central bank model, the Greenspan put. Remember that from Alan Greenspan, that no market can go down 1% or 2% without the interventionism of the Fed stepping in to flood the system with more Keynesian credit. But we have we have a lot of collusion and cooperation amongst the global central banks because they're all on a fiat standard. Not a single bank is on a gold standard or other than a fiat money standard. So they all collude with each other. There's never been a taper in 40 years. You know,
Right.
the net aggregate global monetary policy has always been expansionary. And it's just been, we see it on the charts. It's not hard to follow. Okay, into this mix comes Bitcoin. And now we've got El Salvador that's gone on the Bitcoin standard. They're mining Bitcoin with their volcano. They just mined their first Bitcoin with their virtually free volcano energy. This is going to be the only. Let me say it this way. In 1971 was the beginning of the fiat standard. In 2021, 50 years later, with El Salvador, is this the beginning of a return to a hard money standard thanks to El Salvador and Bitcoin, Lawrence?
I think we are. I really do think we are. I think it's an enormous development. And I think Bitcoin is really a thing of beauty because it's, as in my speech, I talk about this, as Hayek once said, you know, it's going to be really hard to take control of fiat money away from the state. The only way we can do it is to introduce something slyly that they don't understand and that they can't stop. And, you know, Hayek was talking about Bitcoin. He didn't know it at the time. But as you know, Bitcoin is very attack proof and Bitcoin is incredibly sound money. And over time, the soundest money wins. And so, yes, I do believe that we will ultimately return to a sound money standard. And there could be a gold piece to this too, as you are very well aware. You know, I don't think China likes Bitcoin. China's a pretty big economic power. China's accumulated a lot of gold. And I would think one of the moves they might make would be to try and introduce a gold standard in China when we do go to sound money.
Yeah, I think I could see that happening. One of the problems with gold has to do with the energy required to mine gold, and energy. Bitcoin ultimately is a 51% attack on global energy, which may starve gold and fiat to death. But that's for another time to discuss. Let me get into one other topic here. I'm looking at these gold miners and even the silver miners have their worst month in history last month. What's going on with these? You manage money. You're looking at the Quotron, as we used to call it. What do you got over there? A Bloomberg machine? What's going on over there?
It's been brutal, man. It's been absolutely friggin' brutal. Stock selection helps a little bit, but the fact of the matter is that the stocks are the tail that gets wagged by the dog. I mean, the underlying. I was just at the gold shows out west earlier this month, September. Now I guess we're in October, and all the miners are there, and they're saying, look, we got $1,800 gold, we got $1,000 ASIC, which is the cost to take it out of the ground. That's $800 of profit, and we feel like we died and went to heaven, but the stock market sure doesn't know it. The gold stock market, and the reason is that. Gold stock investors are what I call beaten dogs. I mean, we've been beat up for, with this manipulation and these prices. I mean, or we're Charlie Brown and, Lucy's got that football and we're ready to take another swipe at it. She's going to pull it away. And the minute, you see any softness on the gold side, on the gold price side, these stocks get pounded. They just get pounded. And so,
Lawrence, markets are discounting mechanism, right? They take all the information, they assimilate it, they process it, they create a price. That price,
right.
Tells us really looking forward. It's always forward looking. What are these gold mining stocks? The price is telling us that $500 an ounce gold is in our future.
No, it's about $1,500. They've kind of discounted in about $1,500 gold. And the guys in Toronto all think that's going to occur. And if you look backwards, this rhymes a little bit with 2011 to 2013, and people have long memories and they remember that time period. And we got our handed to us. I mean, I lost so much money; it's ridiculous in that time frame. And yet, this is different than that time, because at that time the foreigners were still buying our bonds, and now there's really only one person buying our bonds, and that's the Fed. And at that time, they didn't have direct money going to consumers. Now we're sending checks directly to consumers. And furthermore, at that time, and this is a huge one, 40% of all the money in existence, all US dollars in existence, have been created in the last 2 years, Max. 40%. And it's not slow. I mean, it's slowed down from the pandemic push, but it's still continuing. And so the fact of the matter is that inflation is there, and it's going to filter through to gold, and it's going to filter through to Bitcoin. Obviously, as you and I both know, the gold price has been suppressed. I mean, they created paper gold. There are tons of papers that showed how they did that, why they did that. They know it's a fire alarm. I mean, that's the beauty of Bitcoin. the beauty of Bitcoin is it's the fire alarm that hasn't been silenced.
I'll give you a bull case for gold.
Okay.
The price of Bitcoin skyrockets to the point where you can't get any Bitcoin. Michael Saylor's buying it all. And so in a desperate bid, people are forced to have to buy the poor man's Bitcoin, and that, of course, is gold.
I like that. That works for me. I mean, I'm just trying to make it to the other side, Max. I mean, this is crazy stuff we're living in. I mean, you look at what the governments are doing, it's a mess, man. It's a mess.
Yeah. Well, anyway, great talking to you, Lawrence Lepard. You know, he's a clear thinker on both Bitcoin and gold. He's a rare breed. Thanks for being on Keiser Report.
It was an honor to be here, Max. Thank you very much.
Well, that's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank our guest, Lawrence Lepard. Until next time, bye, y'all.